Now let's talk about what to invest inside a Roth IRA. And please keep in mind that none of what I'm about to talk about should be considered financial advice. I personally have JP Morgan Chase for my Roth IRA. My wife has Fidelity. So inside a Roth IRA, I can invest in individual stocks, ETFs, mutual funds, and bonds. And keep in mind that the Roth IRA doesn't require you to pay any taxes on dividends or capital gains because it's a tax advantage account, right? I might even consider something that pays a higher dividend yield or mutual funds that have annual capital gains. So actively managed mutual funds with high turnover rates are fine because of Roth's tax protections. But what matters to me more is the cost of buying an ETF or mutual fund. If I buy individual stocks, there are no commission fees from these brokers anymore. But buying individual stocks can be very risky if you don't know what you're doing. I have individual stocks, but that's not really something I want to encourage my audience to do. I expect you to do your own research before you invest in any individual stocks. So, what is actively managed funds? Active investing is when there's a portfolio manager who actively manages your portfolio to try to beat the market's average returns by buying and selling short-term price fluctuations in the stock market. If the S&P 500 performs 10% in return this year, then the actively managed funds will try to beat that 10% return for the same year. And actively managed funds can be mutual funds or ETFs. And some examples are Cathie Wood's ARK Invest ETFs, Fidelity, Vanguard, and Schwab all have actively managed funds. And here are some pros and cons of actively managed funds. Active funds can post some incredible returns some years, but not every year. So I'm going to show you this. For ARK Invest, they had 152% in total return in 2020. But in 2021, they posted a negative 24% return. And in 2022, they had a negative 67% return. So if you start investing in ARK in 2021, you're down almost 91%. But if you start investing in 2017, you're up almost 186% or about 37% annualized return. And statistically speaking, and I'm not just talking about the ARK funds, but most actively managed funds underperform the market index. And I'm not by any means discouraging you from investing in actively managed funds, but I want you to be aware of the performances and fees. And also, every time an active fund sells a holding, the fund incurs taxes and fees, which brings down the fund's performance. You also have to pay a flat fee for the actively managed funds, regardless of their performances. For example, if the fund charges you a 2% annual fee, the S&P 500 index fund performs a 7% return, and your active fund gives you an 8% return, then you still lost 1%, right? So let's talk about the passively managed funds. These are the fancy words for what you know as index funds. And index funds can be both mutual funds and ETFs. That's the common misconception about index funds, that they're just mutual funds. So index funds can be either mutual funds or ETFs. And index funds match the performance of a specific market index as closely as possible. You can buy and invest in major indices like the NASDAQ, S&P 500, or Dow Jones Industrial Average. They're also more tax efficient than actively managed funds because their portfolio managers trade less frequently. But it doesn't really matter with the Roth IRA because you don't owe any taxes for dividends or capital gains. And let me know in the comment section if you have certain index funds that you love, and the successful passive investors focus on the long-term growth strategy instead of the short-term setbacks or downturns, right? And last year in 2022, my index fund was down 18, 25, or 30% in that 1 year. What did I do? I just rode with the market. Did I panic? Of course not. I just bought more index funds with an 18 or 25% discount, right? And I still have 22 years until I'm 59 and a half. So I'm just going to keep buying into these index funds because I believe they're going to grow exponentially over the next 22 years. And also, because I believe in the US economy. And I believe in the US economy more than any other economies. You can also invest in specific index funds created specifically by, I said specifically twice, by Vanguard, Fidelity, Schwab, or other major brokers that match the market indices. They also have target date retirement funds that can automatically allocate your stocks and bonds inside that mutual fund. It's what I call the invest and forget strategy. And but if you want to figure out your own allocation strategy, I really like the rule of 120. And I talked about this in the previous live stream, but I'm going to show you this real quick if you're brand new to my channel. You do 120 minus your age to determine your stock bond allocation. Okay. So let's say you're 35 years old, right? Simple. 120 minus 35 gives you 85. So 85% stocks and 15% bonds. This is not in any way or any form of financial advice. Okay. This is just an example. If you're 25 years old, then it's 120 minus 25, which gives you 95 or 95% stocks and 5% bonds. It's a good starting point if you don't want to invest in the target date retirement fund or you want to be more hands-on with your allocation. And I'm pretty much 70% index funds and 30% individual stocks inside my Roth IRA. And my goal is to get a 10% annualized return every year, and 15% would be even better. My index funds are like my core equity funds, and the individual stocks I pick out have some great potential growth in the future. And I will reveal what I have in my Roth IRA during the private group coaching session immediately after this live stream. But let's go over some index funds together. So my wife has FZROX because her Roth IRA is with Fidelity. And believe it or not, that is the only index fund she has in her Roth IRA. And what's awesome about this index fund is the 0% management expenses. And yeah, it's even cheaper than Roth IRA, not Roth IRA, than Vanguard and Schwab, because this index fund has no management expenses. So when you research index funds, let me show you how to read this page, okay? Again, this is not financial advice, just to show you how to read or how to do a research on the index fund. So this is the Fidelity Zero Total Market Index Fund. So right now, the share price is $14.45, and the year-to-date return is 8.24%. And Morningstar, I don't really read that. That's just a rating from another company saying that how this fund is, how people are doing with the funds. But this is a very new index fund because it's only been around since 2018. The first glance right here, the performance for 1 year, so from starting from today, April 19th to April 19th of last year, it is down negative 8.52%. We all know why, right? 2022 with a high inflation in the bear market. The last 3 years, it has performed 18.59%. That's annualized return. It's not just 3 years total, but that's the annual return. Okay. Life is 9.49%. It hasn't hit 5 years yet, but we should be able to see the 5-year historical return pretty soon. But that's 9.49% every year. Okay. So when you scroll down to the summary, this is a large blank category. So what that means is that between growth and value stocks. Okay. So yeah, see, fund inception. That means this fund has been around since August 2nd, 2018. So the track record isn't really as long as Vanguard or Schwab's index funds. The expense ratio, this is incredible. It's 0%. So it costs you nothing to invest in this index fund. Vanguard, I have a VFIAX, which is the Vanguard S&P 500 index fund. That costs about 0.04%. I wouldn't say, hey, you should make a switch from Vanguard to Fidelity to have 0%. 0.04% is really nothing, right? It's, like a dollar, every dollar is like 0.001 cent. Wouldn't do it. I wouldn't make the switch just based on the expense ratio. But if you're investing in something like, let's say, 2% expense ratio, and you want to invest in like an index fund, then might not be a bad idea. I can't tell you what to do, but that's something to consider. Okay, the minimum to invest is $0 too, and this is great compared to Vanguard because Vanguard has a minimum of $3,000 to invest in their index funds. Most of them turnover rate 3%. What that means is how much the index fund swaps in and out of the stocks, right? So this one has, I believe, 2,000. Yep, it has 2,780 stocks. So what that means is that, let's say they want to swap out Apple with another company. That's the turnover ratio. Okay, that's what that means is that they took out the stock and they put something else in there to track the index. Okay, so when you scroll down, yep, the 12-month low high just means that for the last year, the lowest price we've seen is $12.64, and the highest price is $16.10 per share. And right now it is trading at $14.45. So it is trading somewhere in the middle, in between. Okay. And right here in top 10 holdings, it says Apple, Microsoft, Amazon, Nvidia. It just means that the portfolio allocation, that 6% of this index fund is in Apple, 5% is in Microsoft, 2% is in Amazon, 1.7% in Nvidia, 1.54% in Google, and 1.38% in Tesla. And another 1.38% in Berkshire Hathaway. And if you don't know what Berkshire Hathaway is, that's Warren Buffett's company. Okay, so those are the top 10 holdings, and you can always read and see what the rest of the 2,800 stocks are if you just click more. But it also tells you like your hypothetical growth. So if you start investing in 2018, this is how much money you would have if you had invested $10,000 from 2018. So that's really fun to just kind of look over. And if you look at the performance and risks, just shows you how this index fund has performed in the last year, 3 years, 5 years, and 10 years. So the zero total FZROX hasn't been around for 5 years. It will be 5 years as of August this year. So it doesn't have that data, but it also compares the other index funds to tell you how this index fund is performing compared to the other ones. Let's go to composition. This just tells me what sectors this index fund is investing in. So this tells me that information technology is about 25%, healthcare is 14%, financials, think of it like PayPal and stuff like that, or banks will be 13%, consumer discretionary, 10%, industrials about 10%, and communication services like Verizon will be 7.5%. So it tells you what sectors this index fund is investing in. So it's very diversified, right? Because this is a total stock market index fund. So it's investing in 2,800 US large stocks. So the large companies have a lower risk of going bankrupt. Imagine this, if Apple goes bankrupt, we'd be in big trouble, right? There's something else going on with Apple at that moment. If Microsoft, Apple, Tesla, all those big companies go bankrupt, then we are in a serious either recession or a depression. So you can look at the fees and distributions. I will look at these 3 tabs or 4 of them: summary, performance and risks, fees and distributions, and composition. Okay, it tells you the expense ratio is 0%. So literally, you pay nothing to invest in this index fund. And it tells you even the dividend history. So it looks like the dividend yield for this index fund is about 1.4, 1.5% in dividend yield, which is pretty good. I don't expect these types of index funds to be paying high dividends. Okay. And it tells you what the capital gains history is and all that. And it tells you what the price is per month. It tells you what the low and high and close. So yeah, Fidelity is pretty good. That's how you do research. If you had a Fidelity account, yeah, a lot of people love this ETF, SCHD, Schwab U.S. Dividend Equity ETF. So like before I invest in anything, I always just open up and look at the fact sheet and what's investing in. This is an ETF, not a mutual fund. Okay, so that means is that I need to trade this ETF when the market is open. So it tells me that this is trading at $73.65. I'm sorry, that was the opening value, and it closed at $73.94. So total shares, there are about 2.1 million shares. Fund inception, so it's been around since 2011. And the expense ratio, you see right here, it says 0.06%, right? It is still very low for holding this ETF because it is an index fund. And it is, it's called Dow Jones US Dividend 100 Index. There's a share price, total holdings. So that means how many stocks are currently invested inside this ETF. So ETF is a basket of all 104 stocks that this ETF is holding. And portfolio turnover rate is higher than what we saw earlier. It's about 31%. Okay, that's as of 2 weeks ago. Okay, management style is passive, and that's what we talked about earlier between active and passive. This is an index fund, so it is managed passively. If this is a actively managed ETF, then it would say active on there. Okay, SEC yield, if you want to know how much the dividend is paying from this ETF, is 3.52% for the 30 days. This is going to fluctuate based on the share price. If you go to my previous live stream, I talked about the dividend calculation. Take a look at that. Go to my live stream playlist and look at the dividend calculation. Or you can go to Fireside Chat on YouTube, Fireside Chat dividend calculation or dividend payments, and I showed you guys how to calculate your dividends. Okay, so 3.52% is what this ETF is paying. So it has all the performance charts, and it looks like it's paying incredible at 12% annualized return for 10 years for the last 10 years. And since inception, it's 13%. Wow. Okay. I didn't even know that. I just pulled it up and looked at it. For the last 3 years, it's 21% annualized return and 12% annualized return for that. So this is a very popular ETF. And I know a lot of you guys do comment in the videos that how much you guys love SCHD. If you have Vanguard mutual fund comparisons along with ETFs, and it tells you, hey, this is the S&P 500, and then there's the communication services ETF and stuff like that. You can like compare these three index funds, and you can just go to another screen and take a look at what they are. And it tells you what the share price is. The expense ratio, it looks like they're all 0.04% or 0.07% in some of them. But it tells you what they're invested in. So, and as well as their performances. Vanguard is another good website to research a lot of these index funds. You don't even have to be with Vanguard to do the research. They have an incredible website to take a look at it. So, what's nice about the index mutual funds is that I get to like schedule automatic investments. My Roth IRA is set up to just invest and forget right now. And I don't ever have to stress about it. But if you prefer to invest in ETFs, you have to buy ETFs when the stock market is open between Monday and Friday. And when you contribute to the Roth IRA, you can just leave that money in the money market fund and then buy ETFs when the market is open. What I would recommend is that you set up a reminder on your phone or something to buy ETFs if that's the route that you're taking. You can always schedule automatic contributions to the Roth IRA and then manually choose your investments. It's completely up to you. You can also set a certain price to purchase ETFs. It's also called a limit order. So if you're looking to buy an ETF, let's say currently trading at $50 a share, but you only want to buy it at $49 a share, you can set that in the limit order when you trade stocks, or I'm sorry, not stocks, ETFs, but only if you already have the money in your money market account. And you can set that up to 60 days, the next 60 days that you want to purchase that ETF for $49 per share or whatever price that you want to set to. Okay. So I'm personally a fan of both ETFs and index funds, and I never invest in any actively managed funds because of the high management fees. And what I also like about ETFs is transparency. And most of them disclose their holdings on a daily basis. The net asset value, or NAV, okay, you see a NAV price, right, of an ETF is basically the sum of all assets, including cash minus the liabilities, and then divide that amount by the number of shares outstanding in the ETF. Okay, I might have lost some people there, but I know that might be a little bit confusing. So let me just try to simplify for you. It's different from the market price when you research any ETF, because NAV is the value of each ETF holding based on the shares portion of the fund's assets at the end of the trading day. And it's calculated just once at the end of the trading day after 1 p.m. Pacific time or 4 p.m. Eastern Standard Time. It's basically to tell me, as an investor of the ETFs, daily portfolio holdings, as a part of its transparency. They're being very transparent about what they're holding and what the price is. Okay, that's really what it is. And I know that's like super nerdy, but if you're wondering if ETFs or mutual funds are right for you, it's completely up to you. I would pay more attention to the expense ratio so they're not charging you too much to invest in that fund, right? And is now the right time to invest? I never time the market. I'm always investing. If the market is high, I'm investing. If the market is low, I'm investing. I don't care how the market is doing when it comes to my Roth IRA, 401k, or TSP, because I'm not looking to touch these funds for another 22 or 23 years. My strategy to dollar cost average my investments have never failed me.